What's going on today, Nuview audience? My name is Alex Sylvia. I'm an IRA specialist at Nuview Trust Company. And today we've got a little IRA quick tip for you. And this one is going to be surrounding tax liens. This is a very popular investment choice for a lot of Nuview clients. It's got an arguably low barrier to entry, and it's just a really interesting investment because just like all things alternatives, it's probably something that you just haven't thought of yet. So what is a tax lien? A tax lien is essentially back taxes that are owed on a property, taxes that are owed to the state government. When a property owner, when they have a house, they have lots of different expenses. There could be HOA fees, there's most likely a mortgage, and then there's also property taxes. But what happens when property taxes aren't paid? There is a tax lien that is created, and that homeowner now owes back taxes to the government. And as time goes on, there's likely going to be penalties for not paying your taxes as well. Now, what happens when the homeowner isn't able to pay off the tax lien? What happens in that case is the US government, they want their money. The state governments, they also want their money. So in this case, what they're gonna do is they might sell those tax liens to investors. And this is where you come in with your Nuview self-directed IRA. You can actually purchase these tax liens at auction, and you will now be the recipient, or your IRA will now be the recipient of those payments on the back taxes. Now, tax liens are relatively cool as well because they also come with built-in collateral. If that homeowner does not pay off the property taxes in the allotted time, because there is an expiration date, you can foreclose on that property. Now, when property taxes are past due, sometimes that might only be a month or two. In that case, property taxes that are owed may be as little as $500 to a couple $1,000s. The price can vary, but essentially what I'm saying is that you can take a small amount of money, invest it into a tax lien. Worst case scenario, if that homeowner is not able to pay off those owed taxes in the allotted time, your IRA could foreclose on the property and now be an owner of that property as well. Think of the trade-off there. Now, of course, we're not in the business of trying to take people's homes or be any type of predatory investor. But what's cool about tax liens is, like what I've already mentioned, the US government wants their money. So when they're selling these tax liens at auction, they're likely going to do so at a discount. Now, at auctions, you do have to consider that there are other buyers there as well. So there might be some bidding wars. You make money when you buy a lot of the time with alternative investments. It applies with real estate, and it also applies with tax liens too, just because of the nature of how they're sold at auctions. Now, even still, you've got a great opportunity to use a small amount of capital and possibly grow it into a much larger amount of capital should you or your IRA have to foreclose on that homeowner. Now, I will say that with a grain of salt because tax liens are also a relatively safe investment as well, because generally speaking, the strong majority of people, before they pay off their mortgage, if they're behind on their mortgage, they will pay off the property taxes first because it's owed to the government, not a bank. People naturally take care of property taxes first. So as far as investing in something where you're not guaranteed to get the payments, but there's a strong likelihood that you will get the payments back. And if you buy buy a tax lien, they're very similar to notes. Apologize for the slip up there, but if you buy a tax lien at a discount, hypothetically speaking, you could get returns anywhere between, this is a ballpark, it's always different, but let's just say for example's sake, 5 to 15%. It all depends on how low you can buy that tax lien though. So for those of you with a small IRA, maybe an HSA or an ESA, small 401k, maybe something that you've just started, or something that just hasn't maybe done that well in the stock market, tax liens could be a good opportunity for you to get that money working in a relatively safe investment, depending on how good you are at finding a discounted note. They do have expiration dates, so if you do need to foreclose on that homeowner, you need to make sure that you're ready to take action and make that process start. But all things considered, in the world of alternative investments, tax liens is just another method of diversification. It's still tied to real estate, but what's cool about tax liens, like I already mentioned, is the low barrier to entry. If you want to learn more about tax liens, we'd be happy to speak with you further. We're not investment experts here at Nuview because we don't give financial advice, we don't give investment advice, legal advice. So just be aware of that. We're happy to still have the discussion, maybe introduce you to tax liens, point you in the direction of some resources. At the end of the day, you are the self-directed investor. At Nuview, we provide the tax-sheltered investment vehicles to you, and you, the entrepreneur, are able to take your investments off of Wall Street and onto Main Street. So if you have any questions about tax liens or getting an account started at Nuview, give us a call at 407-708-1853, or you can shoot us an email at iraspecialist@nuviewtrust.com. So once again, my name is Alex Sylvia, IRA specialist at Nuview Trust Company, and we'll see you next time.